Tesla just got 12% cheaper. Yes, they came out and automotive revenues were down 7% year over year, although they were up on a quarterly basis. But the long-term view of Tesla is completely different. Their energy revenue increased 100% year over year. Their services was up 21% year over year. And FSD, their full self-driving, is going to become an industry standard at some point in the future, and it would be easier and cheaper for car companies to use Tesla's technology. And while everyone is concerned about their operating margin, it did increase from the previous quarter. Income from operations was up quarter over quarter, and the same with their net income. They have 112 billion in assets and 45 billion in liabilities. And they have their robo-taxi potential, which can be a significant growth driver for them, and they are investing in robotics. I mean, with these kinds of segments in Tesla's business model, you can't view it as a car company, especially in the future. So this dip in Tesla, I think, is just short-term noise and will just be looked at as a buying opportunity years down the road. Now, Google also reported earnings. They delivered revenues of 85 billion, up 14% year on year, driven by search as well as cloud, which for the first time exceeded 10 billion in quarterly revenues and 1 billion in operating profit. Operating margin increased to 32%. Operating income was up $6 billion, and all their business services increased on a year-over-year basis, except for the Google network. And their cloud service increased at the fastest pace at 29%. Also, the Google Cloud revenue has started to pick up some steam on a year-over-year basis, and in the future, this can be looked at as a major growth opportunity. Their balance sheet is just phenomenal, with 407 billion in assets and 114 billion in liabilities. That's a very good current ratio. Not to mention, they can pay off almost all their liabilities with their current cash position. Another thing to note is Google pays a dividend, just 20 cents, but I think Google will become a very high quality dividend growth stock in the long term. Their PE ratio is just 2 more than the average stock in the stock market, which doesn't make sense because they're growing their revenues and EPS faster than the average stock. I think Google is just a company you can hold in any economy. We know they're going to put up their numbers, and I think this dip we've seen is just short-term noise and presents a buying opportunity for long-term investors. With that said, I hope you found some value. I'd appreciate if you like or subscribe. J Money out.